All right, what's going on, y'all? So today is a different type of video. This is not a trading to freedom series video. It's more of a how-to / informational video, kind of just showcasing you guys this model that I'm gonna be using from now on. And I'm still trading off like reversals, but a more of a technical analysis and and me holding myself accountable to my rules and my setup, and making sure that when I'm about to take a setup that I'm 100% accurate and I know exactly what's going on. Technically, I'm gonna showcase this diagram that I have for you that I made. This isn't like, I didn't create these rules and make up these rules. This is ICT, the Inner Circle Trader. He made this rule. This is his buy model that he made in 2022, I believe. But I kind of just put in a diagram for myself so that I can easily identify whether this is my buy model or not. And if you guys also want to use this model or something like that, or take a screenshot and revamp it to your own liking, go ahead and do that. I'm not here to tell you that this is the best way to go approach your buy models. I'm just telling you this is what I'm going to be doing, and you can do it as well, or change it if you want, or completely ignore it. But let's get into it. Let me break it down for you guys, and then we'll go into the charts for each question so that I can really break it down for the viewers and for myself. First off, ICT buy and sell models are basically like blueprints for how smart money moves in the market. The buy model shows how price action transitions from bearish to bullish, and accumulation before expansion. And the sell model is just vice versa. It's the opposite. So first we'll go over the buy model, and then each question I'll go in the chart, show you what it looks like, and then we'll do the sell model, and then same thing, right? How I have this set up is here, right? You start here where it says start here, right? You ask yourself this question, and you answer yes or no, right? If it's a yes, you move on. If it's a no, this is not a buy model. This is not your setup. So has price taken out an obvious sell side level? All right, let's look for that. All right, so first, and then after that, right, has price taken out the sell side, obvious sell side level? Yes, we move on. Go into lower time frame, 15, 5, 3, and 1 minute charts. All right, so we'll go into the 1 minute. All right, boom, boom, boom. So we had that sell side sweep there. Okay, cool. Now, has a swing high formed before the lowest swing low that took out the liquidity. All right, so what I mean by that, and what that means is basically this is our swing low that took out the liquidity, and has a swing high formed before the lowest swing low. Well, yes, right here. This is our swing high right here that formed before the swing low. So we would mark that out, and then we let some candles play because it says draw a horizontal line from the swing high to the first candle it meets on the right. So we let some candles play out here and see what it meets with. So we have that line drawn out, right? Does the line intersect with any part of 3 consequent candles that make a fair value gap? Yes. Right? Because this is 1 candle. Sorry, I can't draw. This is 1 candle right here. This is 2 candle. This is 3 candle. Right? What is a fair value gap? A 3 candle pattern with an imbalance between from wick to wick, right? Or something like that. I'm not sure the exact definition, but this is a fair value gap. So, yes, it does. We can move on. If it was a no, it would not be a buy model. This would not be our setup. Right? Does the middle candle of the fair value gap have an obvious and energetic displacement? Now, this is so important, right? Because this happens, right, where price sweeps sell side or runs sell side, right? Breaks structure, but then continues lower, and you're like, what the fuck just happened? Why did I just get shit on, right? We took a sell side out, we broke structure, we had a fair value gap. Why is this shit not going up? Well, because it wasn't an energetic displacement, and that could have been a liquidity run rather than a liquidity sweep, which is something that I will make a short and post as well for some people that don't understand what that is. But yes, the middle candle, this fair value gap is and that broke structure. This is an energetic displacement because look at the size of this fucking candle, right? Broke market structure shift, and it was huge, energetic, using this huge fair value area, right? This BISI, buy side, sell side imbalance. So yes, we can answer yes to that. And if it was a no, that would not be ICT buy model. But here, yes, we do have an energetic displacement. The energetic displacement candles are how you know a shift in market structure occurred, right? That is just a reminder for myself to understand, okay, yes, this energetic displacement shows that there is a market structure shift within the lower time frames. Keep that in mind. This is in the lower time frame, so we still need more confirmation. Draw 50% fib level using the lowest swing low that took out the liquidity and the swing high above the fair value candles. So this kind of confusing when ICT was explaining this, but then I understood. Right, basically what he means is that swing low that took out the liquidity, you mark that out with the swing high right before that swing low, which is right there that I marked out earlier. Does the gap in the fair value gap below or above 50%? Is it below or above 50%? 50% level here. The gap is above. So yes, this is above the 50% level. And then look at that. Place a buy order inside the fair value gap. Okay, buy. Let's just see it play out. Look at that. Just straight to TP. Right? It gave us a little retracement. This would have been a good retracement to buy off right here. This retracement to this gap that I created. Right? But why? But don't expect price to come out into this level. Don't expect that. Right? This isn't gonna, it's not going to pull back here. Right? This candle has already done enough. It's displaced. It was energetic. Right? It started the initial market shift. Right? Now all you need, right? Now all you need is maybe the slightest pullback, but even then you can enter off that closure of that candle and then set your stop loss if you really want to be safe to that swing low or to the body of that bottom of the body of that candle that created the displacement. That's basically how the buy model works. I don't think that was the best example possible, but that was the first one I could find, so kind of just showed you guys there. But the main purpose of this is to showcase this diagram here, right? Not really, I mean, I obviously want to explain it to you guys as best possible, but really just showing you the diagram, being able to like run it through yourself and talk to yourself and answer these questions, right? And follow these rules. So let's move on to the sell model, and I'll show you guys how that works. All right, so this is the ICT sell model. It's basically the exact same thing, just inversed. So we'll just go through it real quick, just show you guys and make it make more sense to myself and you as well. All right, so we start here, right? Has price taken out an obvious buy side level / point of interest. I forgot to add that on the buy model, but point of interest also. So, all right, we have the chart here, NQ. I have a random scenario here. Right here, right? Price comes out and takes in buy side level. It comes into this fair value area. This is a 5-minute fair value area. Look at this with displacement, right? Because look at this. Comes into the fair value gap, just touches above the 0.5 level, and starts displacing. So this is where I would see, all right, is it going to check my boxes? Let's see. Go into the lower time frame. All right, cool. Let's get down to 3-minute chart here. All right. Has a swing low formed before the highest swing high that took out the liquidity. Yes, right. This is the swing high that took out the liquidity. And then this is the swing low right there. Okay. Now draw a horizontal line. Draw a horizontal line from the swing low to the first candles it meets on the right. Okay, boom. So let a few candles print so that we can get to see if we get a fair value gap here or anything like that. Computer's really fucking slow, so it might take a while. Any day now. All right, so I had it marked out but wrong, right? This is our swing high that took out the liquidity, but this is our swing low, right? That was formed before the swing high that was created. Okay, so boom. Does this line intersect with any part of a 3 consequent candle that makes a fair value gap? Yeah, it does actually. This is the first candle, this is the second, and this is the third, right? We can let this candle print out here real quick. All right, boom. So this is a fair value area right here. That it's in there, but it's not directly in the middle in the consequent encroachment, but it's in that fair value area. So let's move on. Does the middle candle of the fair value gap have an obvious and energetic displacement? Well, if you look closely, let's get our draw tool here, right? We came up into this point of interest, started chopping a bit, had some displacement here that was kind of energetic, not really though, right? Retrace, sell off, and then we sell off completely here. This is an energetic displacement right here. This move is pretty energetic. I mean, relative to this chop here, that's an energetic displacement to me. So yes, we can answer yes to that. The energetic displacement candle are how you know a shift in market structure occurred. Just like I said, just another reminder for myself to remember that the energetic shift candle is very important in the model because you have to be able to differentiate what is an energetic candle, right? Look at the other candles relative to that candle. Look at it and see, all right, is this energetic compared to these candles, right? And that's so important. Another thing to be mindful of is the size of the wick of the candle. If it's shorter, then that's more energetic. The longer the wick, the less energetic. You could get it all fucked up there. Because if you think that this is energetic displacement, or even this little sell-off here, you might be fucked, right? And you might get stopped out early. So just really got to make sure you identify what is an energetic displacement, right? This is an engulfment candle. This candle basically takes out all these lows right here, because this candle right here took these highs out, and this takes out all these lows. So it's an energetic displacement. Draw the 50% fib level. Let's do that like we did last time, right? Basically at that swing high. Wait, what did I do? All right, so we do what we did before. Cool. Does the gap in the fair value gap go below or above 50%? Well, in this case, the gap is below the 50% level. It's nice, and it sits very nice and below it, right? It's not right on the 50%. It's right below the 50% level. From that swing high to that swing low, the swing high that took the liquidity and the swing low that was formed before the liquidity sweep, the gap is below right here, right? I'm gonna mark it out so you guys can really see this. That gap is nicely below the 50% level. Okay, cool. And then if you answer yes to that, you place a sell order inside there, right? Boom, we sell. Stop loss at that swing high. That took out the liquidity. We have our TP. For our TP, we can go for either a 1-to-1 or 1-to-2, right? I'm gonna kind of go for a 1-to-2 here at the swing high right here. Place our sell order position here. Go look for our target, put our stop loss, and we go here. Price retraces back to that level, and then boom, we get our TP, right? That was beautiful work right there. Beautiful work. All right, just notice that tap in. Price likes to tap into that demand zone right there. So right here, what a confident trader, what I see like ICT do, he actually, every time I see like a pullback into his level, into his zone, he adds more contracts. Or he's just like, he puts whatever he was gonna risk and leverage at first, but if he sees a respectable pullback that he knows is gonna play in his favor, he adds more contracts because he's a mastermind. He's a fucking beast. Like, he knows exactly how, he's a fucking wizard. That's all I gotta say, right? So in this case, I probably wouldn't add more contracts here because I'm not gonna be that confident, but that's what I see ICT do, and it works out every fucking time. You guys gotta watch his videos because this motherfucker is a mastermind. He's a genius, an absolute genius. He's also a really good mentor too. Just very good mentor, cool guy. So go ahead and check him out. This is where this is all from him. None of this I created. I only created the actual arrows and drew everything out and typed everything out, but he made the entire model. So please give props to him and go watch him. His videos are like 2 hours long. They're boring, but they're so much more informational than any other mentor out there, I promise you. Yeah, that is basically it for the buy and sell model for ICT. That is what I'm going to be following for the rest of the week, for my demo week, this coming week, and then also when I hop back on the funded accounts. But I hope you guys learned something new from this video, or were entertained at least. If you have any questions, comments, concerns, please leave a comment down below, or follow my Instagram, gio.mayorga. But yeah, if you guys want to use this model, I'll just do this. I'll put it here in front of you guys, move my webcam, and so you guys can take a screenshot of this. You guys can go ahead and take a screenshot of that. And then same thing for the buy model. Go ahead and take a screenshot of that if you're interested. But yeah, that's about it for today's video. I hope you guys enjoyed. I hope you guys learned something new, you're entertained, or something like that. But leave a like, subscribe, and I'll catch you guys in the next video. Peace out.